Today we're going to be looking at the returns of the top iShares ETFs. Over the last 10 years, iShares Funds have carved out a remarkable trajectory. So we're going to be looking at the compound annual growth rates and the maximum drawdowns of each fund. Secondly, their performance has been nothing short of stellar. The iShares MSCI India Small Cap ETF, for instance, has delivered a compound annual growth rate of over 10%, while the iShares S&P 500 Growth ETF has yielded a remarkable 15% plus. This kind of performance has not only attracted investors, but also fostered a high level of trust in the iShares brand. Thirdly, the rise of thematic investing has played into the hands of iShares Funds. With portfolios spanning sectors like technology, home construction and semiconductors, this will be important soon. And lastly, there is a strategy at the end that could turn thousands into millions. Let's begin our journey from the least performing iShares fund, the iShares MSCI India Small Cap ETF. With a final balance of $30,883 and a compound annual growth rate of 10.54%, this fund showcases the potential of emerging markets, despite its maximum drawdown of 62.33%. Moving on to the iShares S&P 500 Growth ETF, we see a significant leap in performance. The final balance stands at $51,330, with a compound annual growth rate of 15.65%. This fund leans on the growth potential of large US companies, bringing more stability with a maximum drawdown of 33.19%. These two funds, while different in performance, are both integral parts of the iShares portfolio. Despite being the least performing, these funds have shown considerable growth and offer unique opportunities to investors. Moving up the ladder, we have the iShares Morningstar Growth ETF and iShares Russell Top 200 Growth ETF. The iShares Morningstar Growth ETF has shown a solid performance over the past decade, ending with a final balance of $72,202. With a compounded annual growth rate of 14.88%, this fund has demonstrated resilience even during its worst year, with a maximum drawdown of 40.42%. On the other hand, the iShares Russell Top 200 Growth ETF has surpassed expectations, ending with a final balance of $79,950. It boasts a higher compounded annual growth rate of 16.33%, indicative of its robust growth potential. Despite its worst year showing a maximum drawdown of 46.50%, the fund has bounced back, showcasing its resilience. These funds have not only contributed to the growth of iShares, but also offer a diverse range of investment opportunities. As we approach the top, we find the tech-focused iShares Global Tech ETF and the Shares Russell 1000 Growth ETF. With a final balance standing at $86,358, the Global Tech ETF has seen a compound annual growth rate of 10.65%. On the flip side, the Shares Russell 1000 Growth ETF, with a final balance of $95,030 and a compound annual growth rate of 15.71%. Moving on to the next ETF, we have the iShares Expanded Technology Software Sect ETF with a final balance of $97,376 over the same time period, followed with a compound annual growth rate of 10.77% and a maximum drawdown of 58.56%. But if you're into investing in more tangible assets, the iShares US Home Construction ETF grew to an even more staggering balance of $103,958. And if you look at the compound annual growth rate of 17.86%, you can see that there's definitely demand. Approaching the top of the list, we have number 2, which is the iShares Expanded Technology Sector ETF, posting a final balance of $113,943. and a compound annual growth rate of 19.27%, the maximum drawdown being 62.43%. Then number 10, the best performing ETF out of all 10 in the past 10 years is the iShares Semiconductor ETF, with a final balance of $123,287 if you had invested 13 years ago, with the best year reaching a growth rate of 51.69%. With a maximum drawdown of 80.95% and a compound annual growth rate of around 25%, these tech-focused funds underline the role of technology in driving growth and offer exciting prospects for investors. Finally, are you ready for that strategy to turn thousands into millions? We delve into the potency of dollar-cost averaging, but here's the twist. It's not just about that. Taking that strategy in conjunction with best-performing iShares ETF, iShares Semiconductor ETF. It creates a simple yet powerful approach in the world of finance, and here is how. It is primarily a strategy of dividing the total amount of capital to be invested across a period of time during the highs and, most importantly, the lows. And since the semiconductor fund Sect has had an 80% drawdown, you can take advantage of volatility to acquire more shares at a discount. You do not need to perfectly time the market. Here is the results. Are you ready? If you started with $10,000 and invested $2,500 a month since the year 2002, your final balance would be $8,717,461, boasting an incredible CAGR of 35.57% and a best year of 51.69%, although it had a drawdown of 80.95%. If you compare that to the return of the S&P 500 doing the same strategy, you would have only ended up with about 3.5 million. Thank you for watching. Subscribe for more videos like this.